And now we'll hear from Tooraj Arvajeh. He is the founder and CEO of Perl Street, a data-powered capital raising engine for urban tech startups with physical assets. Good morning, Tooraj.
Thanks, Paul. I appreciate it. Hi, everyone. I'm CEO and co-founder of Perl Street. Super delighted and honored to participate in Wall Street Green Summit. I met Peter Fossaro about 10 years ago at Columbia University when he was teaching renewable energy finance, and I asked him if I could sit in his class. Since then, he became my mentor and friend, and so thank you, Peter, for having me as well. A bit of background about me. I'm a three-time founder, trained mechanical engineer with 20 years of global experience in origination, financing, and operation of over $1 billion climate tech projects and startups. My company, Perl Street, solves the value of death for climate tech startups. Just a bit of context for some of you who may not know that value of death is referred to when the startup is considered too capital intensive for most angel and venture capital investors, and too small and too risky for institutional lenders and banks. Just a bit of track record about us. Over 40 amazing and inspiring climate tech startups and entrepreneurs have used our platform in various verticals, including energy storage, electric and micromobility, food, water, built environment, construction tech, and we've seen carbon capture and space exploration as well. So how are we helping these startups? So climate tech startups with physical assets need lots and lots of capital for lots of different things. In addition to hiring a team, they also need capital to pay for equipment, sensors, real estate, raw materials. And because of the diversity and intensity of their capital, they become a poor match for the sort of a typical Silicon Valley venture capital model. In the earliest stages of the startup, it makes sense to use equity because there is so much sort of uncertainty. However, later on, as the business starts to scale, it does not make sense to use only equity since the uses of capital, uses of cash are diverse. So our strategy is that climate tech startups need to leverage non-dilutive debt financing for the physical assets while preserving their valuable equity capital for much higher value adding activities such as engineering, marketing, product development. Another reason is the high cost of capital of venture equity capital. So debt financing obviously offers a lower cost of capital for physical commodities that are usually more appropriate. And the other interesting part is that unlike financing software-based startups, debt financing doesn't replace equity capital. In hardware-based, capital structures. Debt and equity complement each other and create a more sort of appropriate capital structure for hardware startups. Now, when startups actually go into the non-equity sort of financing, there are also challenges there too. So if you think about lending to startups, there are two main barriers. One is scale, and the other one is predictability. That usually faced by institutional investors and bank lenders. Financing is not available at a smaller scale that these startups currently operate at, and then also a lack of historical data at the company and technology level hinders predictability and the confidence required by lenders and investors. Additionally, on top of everything, there are limited resources for raising non-equity and alternative investments. The equity raising process dominates, founder education. I mean, if you go to, let's say, Y Combinator, there are so many resources about equity fundraising, but there's only maybe one article there about debt financing. So that's why we see a huge problem in this space. There's an oversupply of poorly structured projects. As a result, projects are perceived as high risk by investors and lenders, and the whole process is not as streamlined. and the capital solutions that we see are not sufficient or cost effective. And even though many of these startups that you work with, they have very healthy businesses and profit margins, still they're facing funding gaps. So that's why we at Perl Street, we believe there is a strong need for financial innovation in order for these climate tech startups to engineer both equity and debt in order to meet all of their capital needs for full-scale commercialization. And
Tooraj, I'm sorry.
yes.
I'd like to ask you a question before you go any further. Do you consider the debt financing that you focus on for startups to be, what's just for lack of a better term, more patient capital than the equity funding that companies go out to raise in the venture markets?
So patient capital or catalytic capital comes into the structure.
Okay.
And it's actually is very beneficial for setting up that kind of leverage with debt financing. So the structures that we recommend and we set up for our customers, the way it works is that there is usually a loan loss reserve or first loss capital, and that's called the catalytic capital. And sometimes it's the venture capital investors, they provide that. Sometimes it's provided by some other investors, and that really helps to de-risk the project facility. And as a result, startups can leverage that with senior lenders with much lower cost of capital.
Okay.
Yeah.
Go ahead. You were making a point before I interjected the question.
No.
Continue. Please continue.
Yeah. And so, I mean, and to your point, Paul, I think, what we see in the market is that there are, financial products out there, but none of them are, they're appropriate for a very specific application at a specific time, and they're not scalable. And they're mostly, structured on the lender side. Versus in our strategies, that structuring actually is done at the startup level. And the reason is because their demand for capital is often ahead of what the capital market provides, and there are no readily available capital market products for these companies that will truly service their needs. So these founders are often in what we call uncharted territory as they're trying to solve their financing needs.
So is this taking place in both the developed and the developing economies around the world, or is it an issue? I know it's an issue in the developing economies. Is it an issue of the same magnitude in developed economies?
Yeah, I mean the startup risk is essentially is for developed country is all about predictability of the cash flow. And there's this saying that banks are always in line first to finance the second project, and so what we are trying to do here, first of all, we're trying to solve the issue of a scale by allowing investors and lenders to access investment ready pool of a smaller scale borrowers without actually incurring a lot of due diligence and origination costs. So that's one area. And then the second, so we are lowering the transaction costs for them. The second is on the predictability side, we're sort of looking at providing real-time analytics, so that there is ongoing monitoring of risk, and as a result, the startups can build much better credit using data and transparency. The issue that we see as well with the current VC/PE fund structures is that you have these LP GPs and these funds, but there is no information transfer between these funds. Versus the startups can actually, they travel through this capital journey and they touch on so many different funds. So what we're trying to do is to set up this, more of a GP as a service, if you will, on the startup side, so that they can have a very data-driven, transparent information sharing between different investment vehicles. And this way they can bridge the gap.
I see. So that allows a startup to hopefully avoid some of the issues related to the valley of death that you mentioned, because
Exactly.
their data moves with them across these various uh,
Funds.
opportunities for
That's
funding.
right.
I
That's
see.
right.
Okay.
And so, because
Go ahead.
exactly, and we believe that creativity in deal formation
Hmm.
is the key to opening up potential for these entrepreneurs. So that's why our models enables the startups to structure. It could be either on or off balance sheet transactions. So what happens typically, the startup or the entrepreneur is moved into the position of what we call a sponsor. And through Perl Street, the startup creates a borrowing facility and partners with investors or capital providers who are willing to take on the debt. And so it's a partnership through a special purpose entity, essentially. And Perl Street's platform creates a place for entrepreneurs to uh, first of all, to come together with those who offer the capital, but also to be accountable to a set of monitoring data for unit economics verification, funding conditions, and metrics such as debt service coverage ratio. So by monitoring the performance of the partnership in Perl Street, we help startups to get connected to alternative forms of capital.
Okay. Now, the focus for your firm is specifically on urban tech startups. So let's talk a little bit about why that choice. In other words, we know that that cities keep growing in size, and there's more and more need for technology for managing infrastructure, as well as just workflow and moving people around
Yeah.
urban areas. Why that focus for your firm?
So what's really interesting about urban innovation right now, we see an explosion of distributed infrastructure assets. And so we see macro mobility, for instance. There are different modes of transport that are being used. But again, they're distributed, but they are still capital intensive from a startup perspective.
Mm.
Energy storage is another one. So so the whole innovation around virtual power plant and having distributed energy storage across the city, um, and a smart city. So we have a very great customer that installs sensors for curb management, and construction tech is another one. So it's cities are always one of the major drivers of, I guess, economy, as you know, and urban innovation is so super exciting, and they always touch physical assets.
I was reading a story recently, or I'm sorry, I was listening to a podcast that was about urban development. And one of the things that they were focusing on was that there are cities now that are using sensors to identify when garbage is ready to be picked up at different locations around the city, and so that the refuse pickup can happen when there's refuse to pick up, and it's not just a scheduled routine that people are being paid for when there's not need for their services, for example. That's just one small example of that type of development. Yeah.
And the interesting about urban tech innovation is that when you add these types of IoT devices, they're actually opening up the boundary for new generation of AI and software type application as well. So one of the things that we notice with our startups is that they're installing hardware assets, and these hardware assets are opening up many new value adding opportunities for the customers, whether, as you said, optimization of waste management routes or efficiencies. And then you can, when you have the data, obviously you can optimize, you can apply AI and make it a lot more smarter and intelligent. Yeah.
So now, during the pandemic, we've seen a flight of population from the cities to what is generally, everybody considers a healthier environment for themselves and their families outside of the cities. How are we going to lure populations back to these major economic centers where population density is a fact of life? How are we going to deploy technology across the infrastructure of cities that will address health and well-being issues for the occupants and the workers in all of these locations around the world?
Yeah, that's a very interesting question. I think, I mean, I think the beauty of it right now is that people have choices, and certain things that essentially, like even like virtual conferences that were, not acceptable are now becoming, more commonplace. And as one of the speakers noted before, it saves a lot of carbon emissions if you think about it. So I think one of the challenges with density was also the commute as well. And so by adding better modes of transport, we would address some of those issues as well.
Good. Okay, so what else can you tell us about Perl Street in the next few minutes that we have for your comments?
Yeah, I mean,
okay, expand on give us a couple of examples of projects that the firm is working on right now, if whatever you can disclose, obviously.
Sure. Yeah, I mean, many interesting things. We have a very cool company that is building robots for delivering food and supplies, which can also be used for emergency applications for vaccines and other things. So that's one of the very cool companies that we are very proud of. We have a company that captures carbon and builds diamond out of them, which I thought it was a very cool idea. And a smart city is one of them. So yeah, I mean, there's a company that installs sensors in water utilities and monitors the quality of water, which is very important, especially if, in the US, there are so many sort of medium-sized utilities, about 2,000 of them. And this company that we work with, they use very intelligent sensors, and they monitor real time the quality of the water across the utility, and they manage a lot of the assets for them. And yeah, there's another company that installs sensors in cold chain, and they manage the quality of food supply chain across different countries.
Okay. Yeah. All right. Any other closing thoughts on Perl Street and what you see in the future as opportunities for your firm?
I think we will be adding carbon accounting standards into our platform, so our startups will be able to issue, climate bonds. So hopefully we become, we issue climate bonds through Climate Bonds Initiative with Sean. And yeah, and if you're a founder, if you're a clean tech founder, we'd love to hear from you. If you're a investor or lender to clean tech startups, we would love to hear from you as well. We can and introduce you to some of our startups.
Terrific. Well, thank you very much, Tooraj. We really appreciate your participation in session 1 today. It's Tooraj Arvajeh, who's the founder and CEO of Perl Street, a data-powered capital raising engine for urban tech startups with physical assets.
Thank you.
Thank you.